Now, we had another down day. The Dow had a bullish falling wedge. It broke through the lower boundary. It's now forming a channel. It's likely to fill the gap tomorrow. Right after the market closed, we saw the Dow drop another 200 plus points. Back to fill that gap. I'll show you the chart in just a moment. VIX is predicting in the next 2 trading sessions, we're going to have an up day and possibly a short-term bottom. And down 411 points, down 1%. After hours, dropped about another 250 or so immediately after the closing bell. S&P is down 39 points, down 0.75%, closed at 52.67, rounding up. The nasdaq was down 0.58%, still down the worst, 1.5%. VIX was up over 10%, and again, that means in the next 2 trading sessions, the VIX is predicting that we're going to have an update or possibly a bottom. It's predicting that we're going to get a bounce or a bottom. That's what the VIX is predicting for the short term, because it rose more than 10%. VIX was up 1.36 to close at 14.28. As the Dow has been selling off sharply last week, 2.5%, down sharply this week, Dow's coming back down to fill the gap from May 3rd. That's back over here, this gap right here. This is where the Dow is. It's coming in after hours. The Dow's coming back down to these lows and attempting to fill that gap in after hours. So again, we'll be watching on the 60-minute chart of the Dow. S&P is coming back in all likelihood to try to fill this gap. We never did quite do it with this low. Now, I told you channels often expand, trend lines often change. Angle of ascent or descent often changes. And again, we broke the trend line here. We went to a new high and we had another trend line. That trend line has broken, and now the trend line from this low after the gap and trap down last, I think it was Thursday. And again, we've now broken that trend line. Had a nice parallel boundary from this high here to this high here, it outlined there in black. That has now been broken. Again, if we go back to fill this gap, it could be that we're expanding the trend line here for the boundary, lower boundary of the channel. Still end up having a channel. And if we go lower to fill that gap right there, you could form a divergence on the RSI. We are dropping down in after hours. Immediately, once the bell closed, we started to drop. If we go back and fill this gap and the Dow goes back to fill the gap from May 3rd right here, again, it could be that the Dow rebounds for a lower high, the S&P rebounds for a higher high, and the consolidation completes. As the Dow has sold off back down here to the gap at May 3rd, and there in after hours, this divergence right here is really just giving us this kind of sideways price action on the S&P 500. We've really gone sideways. That's why I'm saying it could be that we have a wave 1 back over here, a wave 2, wave 3, and now we're getting a wave 4, and maybe it's something like this. Maybe it's an ABC like that, and then we get a wave 5, and maybe that takes us up into that upper boundary, and the wave 5 looks something. So what I'll be watching is, do we form a divergence here on the S&P, maybe again near this trend line? I've just drawn a parallel boundary to this upper boundary right here, and again, do we come back, fill that gap, the Dow fills this gap, and then we see the S&P try to move to new high and either form a brand new reference point of a divergence on the 60-minute chart or build upon the one we have over here, forming multiple points of divergence from this peak right here. Very possible if we get another push higher, it could be that we see that happen and we get something like that where we have a multiple point divergence. Pushes us up into the upper boundary, the channel that I've been talking about. Could this be a 5-leg structure and we're just pulling back, and again we pull back a little bit more, and that takes us on into this upper boundary here as we go towards the CPI data, towards the Fed meeting 2 weeks from today. Fed meetings have been calling the turns in the market over and over again. This next Fed meeting is either going to be a top or it's going to be a continuation. It's going to be one or the other. This Fed meeting was a bottom. Meeting prior to that was a top, over and over again. Here in the video, I'll be talking about momentum signals. Trend signals are still bullish, so watch the video all the way through. Support the channel with the link directly below that allows me to be able to provide you this information. You could take a moment to do that. I would really appreciate it. Follow the link below to take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. Please consider helping out today. I thank you for that. You look at the chart. I've been monitoring it. Talked about it again. I told you last time we had the meeting. It's either going to mark a bottom continuation pattern because we already had the top, the March meeting, and again it ended up marking a bottom. The next meeting will either mark a top or a continuation pattern, one or the other. Still rise into the Fed meeting and the CPI. It very well could be the next Fed meeting marks another top as we had in March. Again, the meetings have marked rate hikes in black and the pauses in red. The FOMC meetings have marked tops, continuation, bottom, bottom, continuation, continuation, top, over and over again. Tops, bottoms, continuation. Every single Fed meeting, they're calling the turns continuation of the trend, or you get a top or a bottom, one or the other. Could it be that we complete the divergence, still off right now, but we still rally into that upper channel line, or maybe overthrow it as Bitcoin did this time it hit it, and or maybe redefine that upper boundary, but it could be still get one more push higher. This is just a pullback if the divergence on the RSI in the weekly time frame is not yet done on the S&P 500 and NASDAQ. So just keep that in mind. S&P still has possible head and shoulders in play. ICD is rolling over here, but it did not get a bearish cross yet today, and could be we still end up forming this larger divergence on the S&P before all is said and done, much like what we had at the July peak right here. We start seeing those all begin to turn back to bearish, then maybe that's all she wrote. We get this divergence on the MACD and it's done, but again, it could be that, again, one here in the more recent price action on the RSI and the MACD, if we get a push up into that upper channel on the weekly chart. If we look at the S&P up close, again, we have the 20 period down here. We have this gap fill right here directly below. Again, we're likely going to reach that gap fill area tomorrow if futures continues to have its sell-off overnight, remain down as we go into the open tomorrow, cover and then sell off as we open, one or the other, sell off further. But again, I'll be watching this level. Again, the Dow's down here, filling a gap right here, down here. We got our back-to-back bullish candlesticks. That's the Fed day right there. And the day after the Fed, we got the inverted hammer and the bullish hammer. I talked about that. Got to rally back up to fill this gap right here, or maybe to a new high, the upper channel line in the weekly time frame, which we've talked about at great length and detail, those scenarios. So again, S&P kind of going in a sideways range, and again, might be getting a pullback that still may end up taking us to new highs, and a head and shoulders pattern could still be under construction, and the head formation, it could be over here. If we buy more time going into the Fed meeting, we could see a divergence develop right here on the RSI. Maybe it goes down and then it goes back up and it does something like that here in the most recent price action. I think that is very, very possible given that we have not hit the upper boundary of the channel. And again, we could exceed this level, hover at that upper channel line for a couple of weeks, as I said, and still see something like that happen. So again, if the Dow recovers, S&P move to a new high because it's not down here at the gap from July or from May 3rd. It's way up here from our more recent gap here as we were clearing this high over here. That's where we're at right now. So we could find support in this neighborhood right here or near that 20 period moving average, our cloud of support, our momentum cloud as well. See that bearish MACD cross, and again, it could end up looking something like that if we get a divergence on the RSI and the MACD. So to keep that in mind, the other possibility is a bearish scenario is that we're getting a reversal and we're going to come down, we're going to confirm this and get a follow through and everything's going to start turning bearish. Over here, we got this little miniature double top pattern, get the bearish engulfing. I told you, again, we got that lower high and it was confirmed later. We got a similar situation with the bearish engulfing back at the July peak. I talked about that previously, but you had both those bearish engulfing candlesticks that gave us lower highs. You got it right here. The question is now, are we going to try to bounce and rebound back up to fill today's gap and eventually try to challenge the high with our bearish engulfing candlestick from last Thursday where we got the gap and trap on the intraday chart. So I'll be watching, do we find support here and then end up going back up? And again, an interesting trend line will be this one right here to be watching, and the upper boundary of the channel in the weekly time frame. Possible massive head and shoulders pattern developing here. May not be done yet, because it's probably not, but again, we're taking out the 10-period moving average, so there's always risk of that happening. We're starting to see momentum turn. We got a bearish reversal of conditions on S&P, but not yet on NASDAQ. Tomorrow, we're going to get the revision for GDP for the first quarter. We already had the first estimate, so watching that. But again, you want to be paying attention on Friday. Friday is the PCE, the Fed's favorite gauge of inflation. Friday, we're going to get the Fed's PCE, favorite gauge of inflation, the PCE, and it's the most inaccurate gauge of inflation. Well, again, the Fed told us that inflation was transitory for so long as they're looking at this broken instrument. CPI is much more accurate. It has its flaws as well. It is what it is. Things become inaccurate because it starts changing the way they calculate things. Things look better than they really are. And that's really what it comes down to. You get a broken index, you get fake numbers. I mean, that's really what it comes down to. But it is what it is. It's what we have to work with. The PCE data is expected to soften. The core number is expected to come in at 0.2% on a month-over-month basis. This is going to be the lowest reading of the year for the core PCE so far. It is expected to soften. We saw the softening of the CPI data recently, and the market celebrated good times with Kool and the gang. Again, it could be that we are setting up for a PCE inflation data. Now, 2 weeks from today, on June 12th, we are going to get two things on June 12th. We're going to get, before the market opens, we're going to get the CPI data. Again, could tick back up. We're going to get the Fed and the economic projections from the Fed. We're going to get the estimate for the amount of rate cuts in 2024. Market has been turning with the Fed meetings. Recently, the last meeting marked our low for a bottom. We got an inverted hammer with the last Fed meeting. Fed meeting will either mark a top or a continuation. Chance you complete the negative divergence on the RSI, and this Fed meeting gives us a top. But that's 2 weeks away. I told you we could hover around this area of the upper boundary of the channel for a week or two or three. But just keep that in mind that the PCE data is going to be out on Friday. Going into the following week, we're going to get the private payrolls and the jobs report the next Friday. Volatility surrounding earnings. Dow has taken a hit, becoming very, very oversold. Continues to remain oversold. Probably going to try to fill that gap tomorrow. The futures dropped another 250 points in after hours that would fill that gap on the Dow in just a moment. Now, the VIX got above the 20-period moving average today. It gapped higher, and it halted right here at the 50-period moving average. This is the S&P right up here. If the VIX pulls back off of the 50-period moving average to fill the gap, still see the S&P go up, make a new high. The VIX can get a higher low. Oftentimes, the VIX will bottom before the S&P tops, but the S&P looks like it's got a five-leg structure, and this very well could be wave 4, and we can get a wave 5 going up into the upper channel that I've been talking about. Kind of going sideways on the S&P. The Dow's had a bigger hit. The Dow looks like it's a five-leg push lower, so it's possible the Dow has peaked, but Elliott wave is complete speculation. Don't read into that possibility. If we rise back up with the Dow and make a lower high, it's very problematic. Sometimes the Dow not making new highs when the S&P still does, because of the Dow just being the 30 stocks and the S&P having a huge exposure to tech. Sometimes we even see them diverge from one another, even though they both represent large caps. But I'll be watching this 50-period moving average, and again, we have this bullish falling wedge. Broke out of it with the sideways move, and now we're gapping higher above the 20. And so again, we'll be watching the gap fill, and if we pull back, again, the market still try to climb to higher levels. I think that is likely. Was up over 10% today. That means that in the next two trading sessions in this short trading week, Thursday or Friday, the VIX is now predicting there's an 85% chance that we will have an up day. That up day could be a bounce or it could be a bottom, a short-term bottom. If it is a short-term bottom, then you've got a possible wave 4 on the S&P 500. If the S&P continues to sell off, again, it might be that we reach that upper boundary and it's close but no cigar. But as I've said, the Dow's very oversold. It continues to get even further oversold. Markets can remain oversold or overbought for an extended period of time. But we got that doji last week. I told you to be watching. Is it a continuation doji or is it a reversal doji? This is a wave 4 in a 5-leg structure higher from this bounce here off of the 20-period moving average here in the weekly time frame, the 20-week moving average. We could still reach this level and still even hit it or even overthrow it and complete this divergence. It could be that the divergence is trying to complete right here now and it's close but no cigar. So we need to be paying attention. Starting to see some weakness now with momentum, but will it change the trend signals? Seeing signs of distribution up at this area. Again, we still may reach it. We have 2 more trading days left. If we can rebound, watching, do we erase this red bar that's developing here, or does it get even bigger with a larger acceleration to the downside? So far, the S&P is down 0.71%, down about 38 points. So again, I talked about a possible evening star. I don't know if that pattern forms. I think the odds favor this level, but I could be wrong, and we could, just not quite reach it. My guess is we're still going to attempt to do it, but we'll see. Signals all begin to turn back to bearish, then that's it. Be that this is just a pullback. We've been turning with the Fed meetings. It could be, as I've said, that we hover up in this area for a couple of weeks, going into the June 12th meeting, and that the Fed gives us the turn, or we turn just ahead of the Fed, just after the Fed. I've been marking tops, bottoms, and continuations of the trend over and over again. Again, it could be that we sell off and we rally into the June 12th PI data and the Fed meeting. And could it be the PCE data that we get on Friday creates some kind of short-term bottom, or maybe we get it Thursday ahead of the PCE data that's going to be released before the market opens on Friday. Watching. As I've said, I think there's a very good shot that this divergence is going to produce a reversal. Is it done now, or is it not yet done? I'll be looking to see how we close the week out on this short trading week. Bring it up close. Again, you can see what I'm looking at here. I got the doji, got the wide range bar here. If we get a wide range bar here, then you've got the possible evening star. So we'll be watching. Do we close weak? Do we close strong? Again, does this pattern form? Does it not form? We rebound, get another doji or something like that, or find the short-term bottom, or get a bounce, as the VIX is suggesting. The VIX is suggesting in the next 2 days we'll get either a bounce or a bottom, one or the other. We break the 5-week winning streak. Again, I told you over here 5.5 weeks ago that we have a possible bottom. Going to take us back up to 5,200 to fill the gap and get a lower high like we did in July, or to get a higher high and go up and slam up into that upper boundary. We haven't reached it. We got a higher high, but we haven't reached it. And again, we could still be forming the head formation in a larger head and shoulders pattern, and it could not, I should say it may not be done yet. Go up and hit that channel line, that upper channel line, or try to overthrow it just a bit and redefine it. Coin, when it hit its upper boundary, it overthrew it and got a topping tail. S&P can do the same thing. S&P and Bitcoin are exact same thing. They both have bounced. Bitcoin's a few weeks behind the S&P, but they both bounced off the 20-week moving average. They're both forming channels, both bounced off accelerated trend lines. Bitcoin has not yet moved to new highs. The S&P has. Pretty fascinating, because they have a positive correlation. So Bitcoin's probably going to join the S&P and make new highs. But is the S&P trying to top right here with this doji and we start a reversal, or is it just a pause and we still go up and slam up into that upper boundary? Again, the Dow is becoming very oversold. S&P is kind of correcting sideways. Still think there's a very good chance that we get a rebound on the Dow, and if we do, the S&P can move to a new high. Sold off 2.5% last week. Well, the S&P, went sideways, getting that doji. The Dow got whacked, and now it's taking out the 20-week moving average. And it is possible the divergence is done on the Dow, and this divergence over here led to this decline, which evolved into this larger divergence. And we dropped 2.5% last week on the Dow. I think we're down 1.61%. The Dow is down over 600 points, and after hours it's down another 250. Got a gap back over here that we'll be watching. The weekly chart of the Dow, let me show you. Now, this is the Dow futures real fast, and I just want to show you this divergence that's developing right here. The Dow, right when the market closed, I mean, the second it closed, it started to pump at the very end of the session, and then it just gave it back, and then boom, the second it closed, the Dow dropped quickly, down 200 points and 250. Now it's down nearly 300 points, and after hours, getting this bar right here that you're looking at. This is the 4-hour time frame, so it was big ugly bar, but that's forming this divergence. This 4-hour chart is very, very close to the 60-minute chart, and again, we have the divergence back up here on the awesome oscillator and the stochastic that gave us a sell-off. Watch the 200 period moving averages. On the 60-minute charts, the Dow was testing its 200 and overthrew it. It's going even further and developing a channel. But I'll be watching. Again, this divergence could be the start of a short-term bottom, or it may tick back up and we may get something that looks like that, where we get another reference point where we start to see it rebound, and then it goes like that, and then we get some kind of rebound back up. And again, it does look like a 5-leg push lower on the Dow, and that's why I'm saying, again, the S&P well could go make new highs. I don't know if the Dow is going to. Hit the 40,000 level, formed the divergence, and began to turn. And here we are, down in the 38,000 range, and futures here, even lower, nearly 300 points lower here in the very, very low 38,000 level. Tomorrow, if we have futures down overnight, if it continues, we could see a gap and trap if we attempt to get some kind of bottom. The VIX is predicting some kind of rebound in the next 2 trading sessions. Maybe we don't get it until Friday. It's possible that it begins tomorrow. If the Dow is moving down here, we're at the gap fill area on the Dow cash chart. Yesterday, the Dow, and over the weekend, I tell you, we could hit this 200 period and try to form a bottom, or we're overthrowing it now. We had broken a trend line with yesterday's close there, and again, there was no formation or follow through. We couldn't get above the momentum line or the momentum cloud, but we did break a little trend line. The trend line evolved into this more of a channel rather than a bullish falling wedge. And again, we're likely coming down right here. Right now, and after hours, we're dropping down to fill this gap. Right now, we've dropped another 200, almost 300 points. Right now, we closed at 411 points lower on the Dow, down 1.06% or so. And again, dropping a few more 100 points. We've dropped 0.6% more. So again, if we come back and fill this gap over here, watching to see if the Dow gets some kind of rebound. And I'm showing you this because, again, it's looking like the Dow has formed this 5-leg push lower. And again, this could be an extended fifth, or the count may be an extended third and a shorter fifth. But whichever way you count it, again, we could try to bottom in this area. We are very, very oversold. When we dropped below the 200, we had formed some divergences, but we're getting multiple points of divergence now. So again, with the Dow and the market dropping after hours, again, I'll be watching this level down in here. Once we fill this gap, in all likelihood, that's going to happen tomorrow. And then we'll see what happens. Again, it could be a gap and trap if we try to gap lower and reverse. Dow bottoms, I'll be watching the Fibonacci retracements. The 50 is still above the 200 period. I'll be watching the 50 if we start rallying towards it. So, as it's dropping, do we end up getting back above it? Does it cross the 200? Does it not cross the 200? Just some things I'm going to be paying attention to on the Dow. I talked about the Dow never did reach that upper channel line. It may not. It did turn down off of the other trend line I had talked about. Just quickly here, you can see that trend line right here in the weekly time frame that we turned off of it. S&P overthrew it. NASDAQ got above it. But NASDAQ and S&P have failed to move to the upper boundary of the channel and the rising wedge on NASDAQ. So again, it's possible that the Dow is topped if on the next rally we stop making new highs. I'll be watching the 20-week moving average as well. We're overthrowing it just as we did the last time around. Selling off, the S&P has been going sideways. Here's the channel in the daily time frame. And again, I've just marked what looks like a possible 5-leg structure to me. If we can find a bottom, as the VIX is suggesting, we're going to get a bounce or bottom in the next 2 trading sessions, Thursday or Friday. And if we do push up to a higher level, it could be that we just slam right into this trend line or even overthrow it and complete possible head formation in a very large head and shoulders pattern that, again, could still be under construction. Again, turning with the Fed meetings, which is 2 weeks from today. If we get this pullback and we get a higher low and we turn back up, maybe we try to rally with the PCE data come Friday. We sell off with some earnings. Market dropped in after hours. Do we get one more push higher and slam up into that trend line or even overthrow it as Bitcoin did? I think Bitcoin is going to attempt to go up to a new high, exactly what the S&P is doing, and that's gravitating towards this upper channel line. Pretty remarkable how they're both doing the exact same thing. Like I said, Bitcoin's a few weeks behind the S&P. I expect it's likely going to make new highs because the S&P did. Again, Elliott wave is speculation. I'm just showing you that this could possibly be a 5-leg structure. Larger count, I have different counts going on. Showing you in this more recent price action what could be a possible 5-leg structure higher. The Dow is selling off sharply last week and this week, moving towards the low from 5.5 weeks ago. Again, it's below the 200-week moving average. The S&P is just kind of pulled back, gradually pulled back here. If the Dow rebounds, it could get a 3-leg structure higher for a lower high. S&P could move to a higher high. S&P closes the week out, but I told you again, we got that negative divergence on the RSI in the weekly time frame. We've got it going on here in the awesome oscillator. MACD got the bearish cross, hasn't turned up yet. It started to turn up here, and then it's turning back down. We'll see how we close the week out, and I'll talk more about the weekly chart. Do we get an evening star reversal, three-week pattern with our doji from last week, or do we end up rebounding with the PCE data before the weekends? Guesses we're still going to rebound and try to make a higher high going into the Fed meeting 2 weeks from now. I told you again, I expected green bars for this divergence to develop. We were trapped between the 10 and the 20, just like Bitcoin was. The S&P pushed up through the 10. We got a bullish reversal of conditions. So again, became open for new highs to reach our upper channel. We've talked about this at great length and detail. So again, this divergence is still carving out. We could be up here for a couple of weeks. The market is turning with the Fed meetings, which is 2 weeks from today. Possible we top ahead of the Fed meeting and the CPI data weeks from today on June 12th, or top with it, or just after Fed meeting and the CPI data. We'll get the CPI, and then on the 13th, we'll get the PPI data. But the market really responds to the CPI much more often than the PPI data. We'll be watching. The CPI comes in tame and the market rallies on it. Could peak with the Fed, could peak with both. Divergences are forming on the RSI and on the awesome oscillator here in the weekly time frame. Done, we're going to see in all likelihood a reversal in the weekly time frame. Same thing for the NASDAQ weekly chart. Again, it's forming the divergence here in the weekly time frame. The same thing going on here with the MACDs. We'll be watching the MACDs in the weekly time frame. NASDAQ's testing the 10-period moving average. It did not get a reversal of conditions today with momentum here. We did get a red awesome oscillator bar. We'll be watching to see if it does. S&P did get one. That either means it's going sideways or it's going down. NASDAQ's testing the 10-period and resting right on it. A possible topping tail. I'll show you that. He's been getting red bars, and again, could mean that it's going sideways or it's going down. You got a reversal of conditions here, which again, sideways or going down, one or the other. So we see the awesome oscillator turn back up and get green bars. It still may form a divergence over the next 2 weeks. Just before 2 weeks from today, try to see the market top out ahead of the CPI and FOMC meeting. We took out the 10 period here, and we are still above the 20, but we took out the 10, and momentum is negative here. We saw the momentum line go negative. It remains negative. We're going back to test the lows of the bearish engulfing. Again, we've got that gap fill directly below. We're still hanging in there with the cloud. Balance of power still positive. Swing trend line still positive. So again, we'll be watching. We are seeing signs of distribution. Doesn't mean we've necessarily topped. We could still go higher and still see more signs of distribution. We are seeing selling into the rally, just like what we had back over here. If I bring up my critical mass cloud, you can see, again, we're seeing signs of liquidation. We're seeing signs of distribution here. We could still go higher, but that's the same thing we had in the topping process back over here. It led to multiple point divergence turning price down. We could still go higher at that major resistance directly overhead. But again, we are seeing evidence of distribution, but we still have a bullish signal here with the critical mass cloud looking at the trend. The bars reflecting the trend on the S&P are starting to turn to orange, warning of that we're a possible reversal or that we're going sideways. Over here, before we got the sell-off, they started warning orange. Doesn't always happen. Sometimes if it's a strong sell-off, we start seeing it turn red immediately. But momentum remains positive here so far. Trend signals still positive. But momentum is shifting here, going from green bars to red bars, showing that momentum is shifting and the momentum line shifting. So again, if we come back, fill the gap down here, trend still may remain bullish. We may just come down further and then head back up to this upper channel line and where these levels connect, pointing up there, which again, could be at some point over the next 2 weeks. If this is just a pullback, we could set up a peak either next week or the week of the Fed. Fed meeting is 2 weeks from today. Momentum begins to turn back to bullish. Say we go down tomorrow and then it's a gap and trap or something, we begin to turn back to bullish. I'll be watching the trend line here. It's the upper boundary of the channel. I'll be watching the trend line connecting these two peaks, and I'll be watching to see if another point of a divergence develops on the RSI in the 60-minute time frame. And if it does, then again, we have a possible 5-leg push higher. NASDAQ got a little topping tail today. We have a possible hanging man yesterday, a little topping tail shooting star today, back-to-back possible reversal candlesticks if we start reversing, and we don't have just a pullback, but we start reversing. Again, you still have the possibility that we get a deeper pullback, but then we go back up here and end up forming a divergence on the RSI. That looks something like that. Again, not perfect, but my thinking there, if we're just getting a pullback. Again, the Dow is down, filling the gap from May 3rd. The NASDAQ and S&P are nowhere near that level. Dow attempts a recovery, seems to be leading the charges up and down. Could still see the NASDAQ and S&P go higher. NASDAQ has that upper rising trend line for the rising wedge in the weekly time frame. You've got a possible head and shoulders here. Again, we could make our way, say we do go higher or we start to reverse immediately, we can make our way down here. By the time we come down here, we could be closer to that 200 period moving average. So you have this possible head and shoulders that could be under construction. P is about to get a bearish MACD cross. NASDAQ not yet. Again, it could be that we still see the histogram get the diversions, preventing that from happening, or even the S&P and NASDAQ both could get the crossover and get something that looks like that. NASDAQ was down 0.7% today, 133 points lower. I talked about this possible rising wedge. We're breaching that trend line again. Gap and trap from last Thursday that gave us the diversions. On the intraday charts, we're getting a lower high. So again, I'll be watching what becomes of all of this. The gap and trap is the bearish engulfing candlestick. NASDAQ's nowhere near confirming that yet. S&P had moved down just towards it. So again, could the boundary be redefining here? I still think there's a strong possibility that we end up going higher. And maybe the trend line just changes and it looks something more like that. But I do think that, again, you've got a possible pullback that ends up giving us a higher high, moving towards the rising upper boundary of the rising wedge on the weekly chart, as I've talked about. Again, you could get a divergence here that is, again, just a larger divergence. Or, again, we could form a fresh new divergence in the more recent price action should we try to bottom out and move higher. Is this a pullback or the start of a reversal? It's a pullback, but again, I'll be watching the trend signal. Signals are weakening and signals are still bullish. Week we're down 0.3%, down 71 points. I still think the NASDAQ's likely going to try to reach this, NASDAQ 100 likely try to reach this upper level. Again, I believe the divergences are forming here The question is, are they done or not? Is it close but no cigar? Dow attempts a rebound, becoming very oversold. We could see NASDAQ and S&P still try to make a new high. So do keep that in mind. These divergences have called tops and bottoms. This one is likely going to be no different. The last divergence we got right here gave us the 8% decline. Over 8% divergence will likely produce a reversal.